Welcome back to Conversations with Kerry, and today I am very excited because all the way from Switzerland I get to have a chat with my good friend Egon von Greyerz. And for those of you that are watching out there and do not know who this man is, let me give you a bit of background. He is the managing partner and founder of Matterhorn Asset Management. He began his working life as a banker in Geneva. He knows a lot about gold and silver. In fact, he knows so much that I've convinced him to come and give a keynote, our major keynote speech at the Gold and Alternative Investments Conference. That is taking place from the 24th to the 26th of October here in Sydney. Now, if you haven't got your tickets, by the end of this interview, you are going to be going to goldevent.com.au and buying tickets, because what Egon and I are going to tell you and speak about, mainly Egon, because he gets this stuff, you just all need to wake up and have a listen. So Egon, welcome to the program. It's great to see you.
Well, Kerry, lovely to see you again. And it was a while since I was last with you in Sydney. The first time was quite a long time ago. I can't remember when it was, 2012?
2011 or 2012.
Maybe 11, yes. So, that was right at the peak of the gold cycle at that particular point. And I remember, we were almost 1,000 people in the audience, or 800 maybe.
You're absolutely right. There was nearly 1,000 people.
Yeah.
But how times have changed, Egon, because, and I want to get into this. I talk to people all the time because I'm passionate about waking people up to the fact that it's a mad, mad world that we live in. And what's going on right now. I mean, let's go back, and I really want you to give our listeners a little bit of an idea of, I don't think anybody really understands gold, and I get lots of people talking to me and saying, what's the price of gold? And I say, don't worry about what the price of gold is. You've got to understand that it's the purchasing power of your paper money.
Yeah. Well, you're absolutely right. And then if people ask you about the price, they tell you the price in US dollars, which of course doesn't make sense at all, because that's a currency that only suits the people who live in America. Everybody else should measure gold if they want to measure it in money, which, as you rightly said, you shouldn't, but people like to have a reference. So then you must measure it in your own currency. And of course, very few people understand, except for the ones who are coming to the conference and a few others, maybe, that gold in Australian dollars has made new all-time highs, already for a while, and much above the 2011 level. And that's the case in almost every currency. But we are looking at gold purely not as an investment at all. It doesn't really interest us, the price. I think the price will go to levels that neither you nor I can imagine at this point. But it's really, we're holding gold for pure wealth preservation purposes. Physical gold outside the banking system, and this is your insurance. And I think people will need life insurance in coming years, because the world economy is going to have real problems. We look at a country like Venezuela. I mean, that's a disaster.
Absolute disaster.
Hyperinflation is probably going to come to the rest of the world also. And think if today you can buy, even if you can't afford big amounts of gold, because everybody isn't wealthy, but anyone can afford to buy a gram of gold a month, for example. I mean, that's $50 or 50 Swiss francs. And that you can afford instead of a few coffees and beers. But people don't, and people didn't in Venezuela either. Now they have no food, and they're absolutely, totally destitute. So now is the time to start. Gold is incredibly cheap today. I show a chart sometimes that shows gold in relation to US money supply. You can take it to world money supply also. And it's the gold today compared to the money printed, money created, is actually as low as it was in 1970 when gold was $35, or I'm talking about US dollars again now, or in 2000 when gold was $250. And gold today is the same level measured against the money printed. So gold is now, again, as it was in 2000, unloved and oversold. And this is still a very good price to buy it. But remember, you're not buying it for a price gain, as I said before. You're buying it because you are.
And I think that's the I think that's the challenge, Egon. Everybody I speak to talks about it as an investment, and I keep saying to them, you know, no, I don't want you to think of it as an investment. I want you to think about it as protecting your wealth that you have. But I think that everybody is so used to having, you know, the paper money. There's my $50, and I'm going to go and pay for something, and it's just it's what they're used to. And, you know, I recently showed some people a gold nugget. You know, people, they don't even, the average person, not average, but the majority of people don't even know what gold looks like.
No.
And why do you think that is?
Well, we know why it is, because for now, a very long period, governments have totally destroyed the value of paper money by debasing it on a daily basis. And of course, that means, and debasing it you do by printing money and expanding credit. And credit has exploded only in the last, if you take since 2000, global debt was around 80 trillion in 2000. In 2006, before the great financial crisis, global debt was 125 trillion. And today is over 250 trillion. So it trebles since 2000 and doubles since 2006. If debt doubles or trebles, risk goes up exponentially, and that's the situation we're in now. So governments around the world have destroyed the value of money. Therefore, people have forgot about saving. Nobody saves anymore, and it's no use saving anyway with negative interest rates in most countries. Who the hell wants to save? They're just spending the money because it's just worth less every day. And therefore, governments obviously hate gold, because gold actually shows the incompetence of governments in mismanaging the economy. Because against gold, you know, every currency against gold since basically 2000, most currencies are down over 80 to 95%.
Yeah.
Actually, most of them are down 97%. Swiss franc is down a bit less, but so currencies have been destroyed only in the last 20 years. And this is why governments don't want to show this, of course, because gold reveals their deceit.
Why don't I, instead of going and buying gold, and we're going into negative interest rates, why don't I just go and borrow $10 million? And if I'm not, they're going to pay me to borrow money eventually.
Of course. I mean, you know, now you're the first bank that I know of that has that where they pay you is a Danish bank, Jyske Bank in Denmark. There you have actually negative interest rate on your mortgage of 0.1%. So it's not a big deal, but you know, it's just ridiculous. Here you buy a house and the bank pays you. Imagine if the negative rate goes up to 25%. Then of course, within 4 years, the bank has paid you for your house when you borrow the money from them. It's absolutely crazy. It defeats all laws of nature, the law of supply and demand, and also the laws of investment. Because if you study economics, you learn that investments always has to equal savings. So that's the only way that the country can grow soundly, by people saving and getting a good return on the saving, and then other people borrow that money. Now nobody is saving because you earn nothing on it. And all the expansion we've had in the world economy in the last 20, 30 years, or even since 71, if you want, or most of the expansion is through debt and debt expansion. And you know, if you print money and then you generate assets, you build things, or you create things with the money you borrow, but since the money is worthless money, printed money is worth zero. And every time government prints it.
the man on the street, Egon, they don't even know what money printing means, and asset prices are going up. I mean, here in Australia, obviously, every person talks about property. Everybody talks about property.
Yeah. Yeah.
Wages have stagnated. Asset prices are going through the roof. You talk about saving is out the window. Well, that's because they can't afford to save anymore. But I also get people saying to me, well, I can't afford to buy any gold. Well, they can't afford not to, can they?
Well, people have got the wrong priorities now, because we are at the end of a major era, and this is the era of the golden calf, when everybody just spends and spends and forget that the world is actually built on savings. You know, coming back to your point, printed money doesn't just mean that governments print money, which they do around the world, but it also means expansion of credit by banks and other and credit institutes and credit card companies, etc. Because every time the bank gets a deposit of let's say $100, it lends out 10 times that deposit.
Yeah.
And that's all money that doesn't exist. So that what, you know, so what's going to happen now is, so we have issued around the world a lot of money which has zero value. But in the eyes of people now, this actually created enormous amount of assets and wealth. In the Australians think they're very rich because their house prices have gone up enormously. And it's the same around the world, and the same with stocks and the same with bonds. But if you use printed money, which is, as I said, worthless money, to create these assets, when we get to the end of this, and the end will be, because that's the only way that this can end will be an implosion of the debt. And when the debt implodes, obviously the bond market will implode and all of the debt. When the debt implodes, also, of course, all the assets that were financed by this debt will implode. So that means that all of these houses in Australia or in America or in Europe, etc., they're going to go down, but maybe by 95% or more against gold, because that means it measured in real terms against real money. It's no use measuring it in hyperinflationary money, because that has no value, because we're likely to get initially hyperinflation before we get the deflationary implosion, in my view. So this is why we are going to see now the most massive implosion of asset values combined with the implosion of debt. It'll take a few years. I've been wrong on the timing before. We went into gold.
I was actually going to bring that up, because when we first met, obviously I've been studying this for quite some time now, and when I first started to hear about this, there were people saying that this is imminent and this could happen at any time now, and we keep kicking the can down the road. So my question to you is, can't asset prices continue to rise? Can't they continue to print money? And can't they continue to hold up the whole system, because of the, you know, too big to fail, too many people can get hurt, and so governments will keep printing money and asset prices will keep going up and gold will become irrelevant?
Well, they will try, absolutely. So we went into gold in a major way in 2002, and of course we had the good run up to 2011-12, when I was first in Sydney, and then we've had now 7 lean years, if you will, when gold is correcting on sideways. But we have to remember that if you look at the trend since 1971, gold has gone from again, I'm quoting it in US dollars, which is the one that is you can keep in your head easily. I haven't got all these values in Australian dollars. So started in 71, it was $35, went up to $8.50 in 1980, and then it was a long correction down from $8.50 in 1980 to $2.50 in 99, 2000.
Yep.
And now the second leg of that in 2000 started the second leg of the gold bull market. And of course, gold is always, over time, has always been in the gold market only because we measure it in paper money, because paper money is always in the bear market. But paper money is always debased until it gets to zero. in every era of time that's happened. So if we know, as you know, if we measure gold against purchasing power, an ounce of gold bought a good suit for a man in Roman times, and it's the same today. So in purchasing power, gold, all it does is just to maintain purchasing power. But so I thought, of course, after the crash of 2006 to 9, that that was the start of the downturn. So I didn't expect that the governments skillfully, I would say, and central banks managed to kick the can down the road. And now, but what has happened is that we are now in a situation where risk is exponentially higher than it was then. So all they've done is to defer something that would have been better to crash in 2008 or 9. Now it's going to crash in the next few years. Now you're asking me, why can't they do it again? I think that you come to a point, and this is the same in hyperinflationary periods, when the printed money, people realize it has no value because it goes down so fast. So as I said, most currencies against gold has gone down by 80 to 95% since 2000. So we are now in an accelerating downtrend for the currencies. And I think now 71, as I said, August 71 was obviously a very important time when Nixon took away.
Just so that everybody out there knows, that was when President Nixon temporarily took the dollar off the gold standard, temporarily.
Yeah.
In 2019. Interesting.
Absolutely. And now we are in a total mess since then, globally. And now I talked about, or wrote an article about that. I see August 2019 as a similar situation, because now every single national bank or central bank in the world between July and August starting talking about, we are going to do what it takes to save the system and save the economy, and we are going to print whatever money necessary to achieve this. And that was the ECB, the Fed, the Bank of Japan, and a lot of other smaller central banks. So that's where we are now, and they know that I see that the banking system now is under tremendous pressure in Europe. I mean, you have the strongest country in Europe, Germany, has the weakest banks. I mean, they're all weak. But it's just that they also have to have the biggest banks, so that they're the biggest risk. And you were talking about Deutsche Bank, which is, again, the stock has gone down by 95%, and the same with Commerzbank. Anything that goes down by 95% in a relatively short period of time, any child looking at that chart can tell you that. Where is it likely to go? To zero. So these banks are bankrupt, and it's only a matter of time. But before they go under, there is going to be another round of money printing. But this time it needs to be a lot bigger than before. And in my view, it's not going to have an effect more than very short term, because once it touches the derivatives, the Deutsche Bank's derivatives is about 45 trillion marks. 45 trillion marks is about about 3 times German GDP.
Wow.
Just one bank has outstanding derivatives. Of course, 3 times the country's GDP. Of course, they will say, well, that's the gross, and net is a lot less. But what they don't realize is that when counterparty fails, growth remains gross. And therefore, you can't net it off then, because when the other side doesn't pay, you have the gross debt outstanding, or the gross liability.
Okay, so I get what you're saying, Egon, and it does make sense. But why is there such? First of all, everybody to me seems to be like, we had the cryptocurrencies in the digital world, and technology is there, and Bitcoin's here to stay, and it's very volatile. And people seem to be investing on hope with crypto. And look, I'm not saying that I'm against it. And in fact, we're doing a whole day on digital gold and what digital means for people. Do you think that having that sort of, whether you call it cryptocurrency or a digital currency, whatever, but this sort of new technology that allows people to use a form of exchange to stay outside of the banks. Do you think that's a good thing? Is that a bad thing? Is it good for gold? Can they work together, or is it just a distraction from what's really coming to hand?
Well, I have some strong views on cryptos. Cryptos is obviously technology is an interesting technology. Every young person and young today, young people are getting older and older, especially when you're getting older yourself. But everybody who's at least up to their 40s or even to 50, possibly, I still call them young. I mean, they're all embracing, of course, cryptocurrencies, especially the 20 and 30-year-olds, because they think that's the future. Now, it might be, but there are many aspects of it. First of all, I think crypto or digital currencies could be a method of payment. And I think probably governments eventually will introduce these in all countries, especially when they introduce a new currency system. They have to write off the existing one because it's worth nothing, and they start a new one to mislead the people. Now we restructured everything, and we have now a new currency. Private cryptocurrencies, in my view, are not going to succeed for the simple reason that if they now remember that the whole of the Bitcoin, I think is $280 billion market value.
Yeah.
And gold's market value is $8.5 trillion. So remember that so far, crypto is a very small part of the total real money, if you want. And I'm not measuring other money. Crypto today, if it succeeds and it gets bigger, governments are not going to allow it to happen, in my view. They're not going to allow a private system, money system, take over, which is uncontrolled, both from the view of transferring of money across borders and from the point of view of money laundering and tax.
They can't stop it.
Sorry?
They can't stop it.
Yeah, of course they can stop it. They just make all the exchanges illegal in every country.
Yeah.
Very easy to stop it. But let me tell you somebody else who might stop it, and that's a fairly new things come out. Google. Google has now already the ability with their supercomputers to decrypt 53-bit encryption. The military-grade encryption is 256-bit, and Bitcoin, and that everybody says it's impossible to break into that. Bitcoin is also 256-bit encryption. But now it's estimated that Google is only a matter of time, and 1 year or two maybe before they can also break 256-bit encryption. Now, of course, you could say then they will double it again, or the military grade will double it. But there'll be a catch up. But if Google already now has the technology to break into that, that will make all the cryptocurrencies worthless or totally vulnerable to attack. Now, people can't do this with home computers because you need an enormous computer power to do this. But it shows you that the danger of technology that can be attacked in this way. And of course, we all know that. I can't remember how much last year there was lost in cryptocurrencies or in Bitcoin, but I think there was over $1 billion lost on exchanges. So when you lose a cryptocurrency, you can never get it back.
Well, yes, but having said that, and by the way, I'm certainly not the best person to talk about this, but I do know that you can take it off the exchange. You can have what's called a cold wallet. People can't hack into that, so there are ways.
That's the only way. No, I know that, and I know friends of mine are doing this. They have a massive cold storage in the Swiss Alps and the mountains, and take it offline and all of that. Yes, you've got to do that, but every time you take it offline, you can't use it. So you've got to put it online, and then becomes vulnerable for that period, and then you take it off again. So
right.
That's correct. I'm not trying to talk down cryptos. I'm just saying that cryptos probably will become, in one fashion or another, whether that will be private or whether that will be government, or whether, sure, we have the blockchain technology, which is not cryptos, it's a lot of other things also, of registering assets, etc. But in my view, yes, it could, except for the problems I mentioned, it could easily become a payment system. But it is never in my world. It's never going to become wealth preservation.
Right.
Because because of the vulnerability of having something electronically and being able to attack it, etc. And actually, all you have is an electronic entry on a computer or on a memory stick. That's all you have. You don't actually, and if you turn off the electricity, you have nothing.
That's true.
But if you have physical gold, you actually still have something physical that you can use for payment. So it's not this. It could possibly be become money, and especially if governments adapted, which I think, adopted, which I think they could do one day. But it's never going to be. We are talking about gold, or our company and I'm talking about gold as wealth preservation. And in my world, cryptos will never replace that.
Right. Egon, I'd like to talk to you a little bit about you coming out to Australia. You'll be talking on Thursday, the 24th of October, 4 weeks this Thursday. What can our audience here in Australia expect to hear from you? I mean, we've spoken today about a few things, but really, what are you going to be sharing with us in Australia? And 4 weeks is a long time in politics, and right now it can be an awfully long time in economics as well. Do you see that there'll be an uplift in the gold price between now and then? We're talking a potentially a rate cut here in Australia, another one. Interest rates just keep going down. Where do you think we'll be? It's only a short time, but do you think there'll be much change?
You know what? I'm so boring because for the last 20 years, I haven't changed my mind. So, some people say he says the same thing over and over again. Which is true, of course. It's a variation on a theme. I'm absolutely certain about that. This world is economically, financially sick, and is not going to last. And therefore, the risks are greater than ever in history, because it's worldwide, it's global, it's China, it's Japan, it's emerging markets, and it's Europe, and it's America, etc. So therefore, I'm going to talk about these risks and show what they mean in figures and words in various countries, and I'm going to talk about the necessity of wealth preservation and protection. So from that point of view, of course, it will be very similar to what I'm saying every time I'm talking to someone. But short term, we have now started, and that's, I think, very good for this upcoming event in Sydney that you're organizing, and you always do it fantastically. So I hope people will really come, because this time it's more important than for a very long time, because we are now started. I talked about early this year, I talked about the gold was going to break what I call the Maginot Line. Yes. Gold Maginot. This was a German, a French defense minister in the 1930s. And Germany, were always the risk that they would attack France. So France built this line against Germany, defense line. And that was very sophisticated, with underground cities, with trains, etc. So it was impenetrable. But Germans still came around, because they came in through Belgium rather than through Germany to France during the Second World War. So they still broke through it. And I said that in my article then in February, that we were going to go break through the 1350 line, which is held, $13.50, which is held for 6 years. And we're going to do that in the next few months, and we did in June. And so that was the first breakthrough, and that was the signal of the next bull move in the gold price. So we've quickly gone up to 1,500. We had a few weeks now of correction, and I think the next wave is starting now. And I think that will be a strong move, and it will be a strong move going into your conference, past your conference, and then going on for years. But I think even in the short term, we will have a strong markets in October, September, October, November. So from that point of view, yes, the timing is excellent, because now people are only interested in gold, except for the few of us, less than 0.5% of investors who actually have held gold for a long time. But otherwise, people only start to look at it when it's on the front pages or it's on television, in the media, etc. And I think that's going to happen in the next few weeks and months. So there will be a sense of urgency now. And I also think that there will be pressures everywhere in the world. You look at what's happening politically, or you look at what's happening in the US. Now they're talking about impeachment again of Trump. In the UK, I mean, a court the Supreme Court has interfered in the political system and calling Parliament back. And the courts are not supposed to get involved at all in politics. So this, from what I understand, the court said, of course, that this has nothing to do with Brexit. It's only if the Prime Minister had the right to actually close Parliament. But from what I understand, of the 11 judges were all Remainers, i.e. none of them were for Brexit. So I think there was a little bit of bias there, or maybe a lot of bias, and that's what's happening now. Politics is it's like they're trying to all the time frame Trump for having done something with Russia that he hasn't done, etc. So we're in the era now of dirty tricks and political instability. And of course, you will have the same in Italy, in France,
and also, Egon, we're going through major social unrest. I've been saying this for a couple of years now, that the difference between those that have and those that have not is ever expanding. The middle class are disappearing. Social unrest will become the norm, as it is right now. And that's kind of frightening. But I'm sure we're going to hear lots more. I'm really excited that you're coming out to see us here in Australia. We'll put on good weather for you. But before we leave, could you please tell our listeners a little bit about Matterhorn Asset Management and what you do? It's not for sort of mum and dad investors, but I'd like to hear and for you to share with us a little bit more about Matterhorn Asset Management and why you started it.
Yeah, absolutely. So I've been in banking, as you mentioned, and I've been in corporate life in the UK. And then I decided that I wanted to spend time on investment and asset protection. And this is how we got into gold at the end of the 90s. And this initially, we created the company as a private company for ourselves, and then a few of the wealthy investors that we had co-invested with or advised. So it was the whole of the system of buying physical gold, storing it outside the banking system in the most secure vaults in the world, where clients have direct or holders of gold have direct access to the gold without a counterparty in between, etc. So that was created initially for ourselves only and not open to outsiders. And then about 5 years later, 2005-06, we then there was a lot of people asking if they could also. We could help them, so we opened it up and became a regulated company in Switzerland. And what we do now is exactly the same. Yes, you're right. We start from a relatively high level of 250,000 Swiss francs or dollars, US dollars, which is the same. So we assist people all around the world. We have clients in 60 countries relatively wealthy people. We have a vault. We have vaults in Switzerland, mainly in Zurich. We also can store in Singapore if people want to. But then we have a mountain vault, which is unique. It's the biggest private gold vault in the world. With partners, we have that as well. and it's also the safest gold vault in the world. But that's for investors from $5 million. So that's, it's quite a big hurdle to get into that. But this is a James Bond experience. It's absolutely unique.
I want to go and have a look now.
Yeah, you should do. There's 9 security zones. You can't open it. You have to have 2 hidden security centers in Switzerland, seeing you on camera, and also opening it at the same time as it's open at the vault level. So it's an incredibly secure, and only Swiss engineering can achieve this. So
of course. Of course, it can only be Swiss engineering. Well, I'm putting that on my bucket list. I want to come to Switzerland.
So that's what we do. We just, this is not, I'm way past retirement age. It's not a job. It's a passion. It's a passion to help people if they want to be helped to preserve their wealth. That's what we're doing, and that's what makes it so much fun, because we're meeting a lot of people who are humble. They don't think they're masters of the universe. They see what you and I are seeing, and therefore they're interesting people to talk to. And every day I meet this kind of people who come here and want to preserve their wealth. So that's what makes it so interesting and exciting for me. It's not a question of, it's not a company from the point of view of that we want to make money. Obviously, if you're successful, money follows. But that's not the purpose. The purpose is just, our passion to help a few people to preserve wealth. And that's, okay, so we're doing it at a high level, and people say, what about me? Well, there are other companies, and I'm a board of another company and have a shareholding that does it for much smaller amounts. And there are then, of course, other methods, like we said, you buy a gram of gold every month, etc. So there are all different ways of saving your money or preserving your money by holding gold. So therefore, we are just doing it on a bigger level, and we've done that since the beginning of the century. And I think we're talking about generational wealth here. I mean, I won't live for generations, but I have family also in the business, and because this is not something that is just a short-term holding. This is this gold, or some gold you hold for the very long term.
Absolutely. It's, as you say, it's generational wealth. And I think that's where, Egon, you and I are very similar. We both have a passion to, I guess, wake people up and make sure that their wealth is not destroyed. And I'm not a conspiracy theorist. I'm not here to scare anybody. And what I say to people often is, look, don't sell your house and your children, but at least have some sort of an exposure to gold. Egon, I'm so looking forward to having you come out to Australia. Thank you so much for joining us today, all the way from Switzerland. And ladies and gentlemen, if you understand even 1% of what Egon was talking about, if you understand even a little bit about trying to preserve your wealth, but you're not sure how, well, what we're doing is we're helping to educate you about just how easy it is to protect and preserve your wealth. So 24th to the 26th of October at the Sofitel Hotel here in Sydney. It's really easy. Go to goldevent.com.au, fully catered event with amazing speakers like Egon. Egon, thank you so much for joining Conversations with Kerry today, and I'll see you next month in Sydney.
Kerry, it's always wonderful to speak to you. I just want to add one point, that we're talking about what sounds like gloom and doom and a pessimistic situation. I'm actually, it might not look like it, but I'm actually an optimistic person. I just believe that you do what you can, you put your house in order, and then you live your life. Now, it's going to be tough times, but the most important thing is really, especially in tough times, is friends, family, a group of people, a circle of people all around that, and helping other people. That's what it's all about, But before that, you put your house in order, and then you live your life and enjoy your life. Because
and don't stress too much about what some of the things that are happening. I mean, it happens. Just get your house in order.
Yeah. Thank you, Kerry. It's wonderful to talk to you, and I really look forward to coming to see you.
See you next month, Egon.